Things were already tense between India and China after the 2017 Doklam standoff and the prior Chinese incursions into Depsang Plains. Then in June 2020, Galwan happened, when Chinese soldiers attacked an unarmed border patrol, resulting in the unfortunate death of 20 Indian soldiers. In a wave of anti-China sentiments, Indians pledged to stop buying made-in-China products, hoping to teach them a lesson. The Indian government too got tough with the northern neighbors, banning TikTok, PUBG and 220 other Chinese apps, and discouraged Indian telcos from using Chinese 5G tech from Huawei and ZTE. By then, already in the works was the famous Press Note 3, which restricted automatic FDI and FPI approvals from neighboring companies, read China. Before PN3, the likes of Alibaba and Tencent had invested in 18 of India's 30 unicorns. Now, they were banned from topping up their investments. Meanwhile, India stepped up the construction of infrastructure and roads bordering China, like the DS-DBO road that gave Indian troops easy access to CPEC, Siachen and the Karakoram Pass. It had the elite SFF troops occupy the heights of Chushul, which could be used as a bargaining chip in case of a military stalemate. Rejected 58 Chinese FDI proposals worth billions of dollars, including investment from Great Wall Motors and BYD to set up plants in India. When the Chinese looked to get Indian partners, that too was put on hold. While India and China were engaged in a progressive face-off, the world's opinion soured against China and looked for a China plus one strategy, which only strengthened India's resolve. Apple, Tesla, etc. lined up looking to make investments in India, with the former promising to move a quarter of its production out of China into India. With great fanfare, India announced its PLI scheme in 14 industries, hoping to attract billions of dollars in investment. Initially, these measures seemed effective during COVID when imports from China dropped and exports rose. But that was only temporary, as immediately after, bilateral trade with China skyrocketed to $118.4 billion in FY24, making it India's top trading partner. This is because India's economy remains deeply dependent on Chinese imports, which are far cheaper than imports from other countries. Therefore, India's move to curtail imports of motherboards, ICs, PCBs, etc. from China was a non-starter. Further, despite 4 years in the running, the PLI scheme has thus far only been successful with Apple in the mobile segment. Seeing the rising trade deficit with China ballooning to $85 billion in FY24 and enthused by Apple's massive $12+ billion worth of exports, a company mentioned no less than 5 times in the government's economic survey, India's chief economic advisor suggested opening up its shores to Chinese investments, barring in sensitive sectors, to boost Indian manufacturing and exports and strengthen India's role in the global supply chain. There is proof this could work. When the US imposed restrictions on imports from China during Trump's term, China invested heavily in Mexico and Vietnam to overcome this obstacle, resulting in Mexico becoming the largest goods trading partner of the US in 2023, surpassing China and Canada with a total trade of almost $800 billion. Similarly, US imports from Vietnam doubled from 46 billion to 114 billion. Ironically showing that one cannot move supply chains away from China without the active participation of Chinese companies. And this is also the reason why India has failed to attract their stated aim of net $100 billion annually over the next 5 years. Because foreign companies using Chinese supply chains hesitated to set up in India as they were not sure if the Indian government would give them permission. There is also a point of view that increasing trade and investment with China will lead to more stable relations because China will have a lot more to lose in the event of a disruption. So the Modi government since the past 6 months changed their stance on Chinese FDI, allowing them to invest provided an Indian partner held a majority stake. So Voltas's proposal for a minority stake in a JV with China's Highly Group did not receive approval, forcing the company to scrap the plan. While MG Motor-owned SAIC Motors sold their majority stake to JSW and got a nod to expand in India with 5 new models by 2025. AC maker Haier got approval after almost 2.5 years to set up an aircon component manufacturing plant. And Dixon Technologies plans a JV to manufacture LCDs, thin film transistors, smartphones and TVs with 2 Chinese companies. Visa for Chinese technicians that the government sat on for months and that were delaying PLI projects were also fast-tracked. But if the key aim by this move is to develop India's ability in solar panels and battery manufacturing sectors, why is it that Reliance Retail was permitted to launch the Chinese fast fashion label Shein, considering it is not of any strategic importance to the country? There are also two opinions of how much India will benefit in power-intensive industries like solar panels, where China has structural cost advantages. However, there is no doubt that there will be other spin-off benefits like technology transfer, learning of best practices in manufacturing, and upskilling of manpower. Take the case of toys. For over a decade, India relied on China for 76% of toy imports, but it soon reduced import dependence to 12% as Indian manufacturing units doubled, becoming a net exporter of toys. However, sensing that backtracking on China could be politically embarrassing, politicians mouthed platitudes for public consumption. There is no rethinking at present to support Chinese investments in the country.
Indians will not like this policy, but Modi and his finance ministry realized that this is needed.
No policy comes without its pros and cons, and sometimes what is good for the country in the long run should be more important than current political sentiment. As long as there's no backtracking on India's integrity on the border, which is never going to happen in this or any future government, it's all good. Bisbo's limerick. Business with China is the need of the hour. IC chips, solar panels and electric cars. But neighbor beware, a promise we swear, we'll defend our borders with all of our powers. You will also find these sources listed in our video description section.